Hey everyone, how you doing? This is Gavin, your host, with our professional trader, Mr. Andy Demi. Just in case you're new to the group and new to the show, this is Pips Like a Pro, where we talk about all things FX. Firstly, how was your weekend, Mr. Demi?
Good, mate. How about yourself? Here's a coffee to you.
Is that in a clear glass?
What?
Is that in a clear glass?
It is in a clear glass. Is that a little bit
A little bit fancy, mate. It's a
fancy? Okay, good. I'm glad you said fancy, not anything worse than that.
Well, that's if you had your little finger up. So,
but
we digress. We digress, mate. It's a beautiful thing when sport can unite people, right? Because yesterday I went with my partner to visit her dad in Brisbane, and he's this big Polish guy, and he hardly ever watches boxing. And the Tyson Fury Deontay Wilder fight was on, and it got delayed, and we were meant to be having lunch. Anyway, long story short, we end up having lunch whilst watching the boxing. And like his partner, they're both Polish. She actually knew quite a lot of the rules, more than she let on. And like everybody was just transfixed on the fight. And it was just really amazing how like a sporting event can unite people. And we were just having a chat about different things. And yeah, it was really cool. I doubt whether you got up to watch the fight, did you, mate?
No, mate, no, I'm not that dedicated. I think the only times I've ever got up in the middle of the night is probably like when I was in America or Las Vegas to watch a Liverpool game. That's about it, man. I don't think I'd ever do it for anything else. But
wow.
But it's great in Vegas that kind of the sports, like you can everywhere you go, they've just got it on. Yeah, so it's I think it depends on the sport as well. Like you say, it brings people together. It also brings a lot of hatred. It really depends.
It's because it's so tribal, right? It goes back to the primal instincts and tribe and kind of belonging. And, you know, I always used to wonder why people would just be so nuts and crazy. And like
I kind of like it, though.
In the stadium, they're nuts, aren't they? They are absolutely
nuts. They are. But like, I like competition. I like rivalry. I'm not a rugby man, as you know. But I've been to a few rugby games. And it's just too nice between fans. Like we're all sitting together, they're clapping for each other. I'm this is
I prefer going to a rugby match than a football match.
You prefer rugby, do you?
Yeah, the last football match I went to was West Ham Chelsea at Stamford Bridge, and it was vulgar. That's the only way I can describe it. It was vulgar.
Yeah, but you're a West Ham fan. That's not the case in Liverpool.
But I was sat in the Chelsea end.
Yeah, but Chelsea and West Ham, I'll put them in the same bracket.
That's fair. However, we travelled to Paris to go and watch England-France at the Stade de France. What an amazing day. What fans can sit in, like opposing fans can sit all together, and yeah, you can kind of give each other some banter and have a crack, but it never crosses that line. And that, yeah.
But you not think that it doesn't mean anything? Like I kind of see it as like in life as well. Like if you don't ever get like emotional upset, it means it doesn't mean anything. It's like you're playing. It's like playing life at an average. I don't know. I don't know. That's kind of how I see it.
So you look at it's such an interest. Like it was such a dichotomy to me because it was like you look on the sports, football. A soccer player gets touched and they're down rolling their ankle. A rugby player gets hit and he gets back up because he doesn't want to show any weakness whatsoever. Yet the supporters are the polar opposite of what the players are. It's crazy. Really interesting. But look, we digress. We're here to talk about FX. Let's do some shout outs. We've got Anita in the house live on Facebook, which is amazing. We got Yanis as well. We got Nick, who's live on YouTube representing the YouTube crowd. Fight was okay. It was like one of the best fights in the last decade, mate. I don't know. You must be grumpy if you're watching it in the UK, and maybe you needed your time your time clock to catch up, because I thought it was an amazing fight. We got Raj in the house as well. So look, let's crack on with things, because as our promises to you, we're going to show you hopefully how to find an FX trade in less than 15 minutes, and we do it every week. Mr. Andy Demi breaks down the charts, nothing's planned, and he does his thing. One of the things that we say to you is showing you how to find low risk, high probability. So one question I wanted to ask you, Mr. Demi, is how can someone, whether they're a beginner, an intermediate, or an advanced trader, maybe more so for the intermediates and the beginners, how do they flush out weak trades? How can they, what are some of the things that they can start to look for to ensure that it's likely to fall into the category of higher probability and lower risk?
I think, well, last week we kind of touched upon sort of time frames, and I think it's quite relevant for this question as well, because if you can't genuinely see the picture of what's likely to happen on a high level, like, you know, where are we? Like, what's happened? So when we're looking at price and you zoom out and you just get a feel for, all right, it's been there, it's come here, we're there. You've got to almost say like, okay, well, it's either a high price or it's at a low price or it's in the middle. And most likely because it's at a high price, it's probably going to eventually go lower. If you can't do that definitively in black and white terms, you know, you're going to struggle to make money on a 5-minute time frame, like on a 15-minute or on an hourly time frame, because you don't understand what you're trading. That's the thing. So like, for example, someone might have a moving average system where they buy on a crossover, right? So, oh, the 50's crossed above the 200 or the 8's crossed above the 21, so I'm going to buy it, like in simplistic terms, or whatever your strategy might be. But if you don't get the big picture, the likelihood is that your system's not going to make money because you don't understand what you're trading. So it's one of the kind of like basic things that you have to learn to do is to be able to identify, you know, I guess categories, like where are we? Are we trending? Are we ranging? Where is the range? You know, like in FX especially, what you probably find, and if you do this exercise when we finish this, if you go to like a weekly or a monthly time frame, you'll be able to see where the majority of the price is spent between a boundary. Like most currencies spend their time between an upper and a lower boundary. You have to identify that. So you have to say, right, are we at the high point or at the low point? It doesn't tend to change very often. Why? Because most economies want to keep their currency stable. They don't want to have, you know, a currency overpriced or underpriced, because they're running a business. They need to know, right, okay, my currency can buy X amount. So when I'm doing business with the United States, I need to know, right, roughly how much I'm going to be spending when I'm buying those imported goods, right? And that's what governments are. They're businesses. So you really need to get what's happening in the big picture, because you know the smart money, the big money is going to go the other way eventually. So like, let's say, for example, you find something that's over, like near the top of a range. And then you go to the 15-minute time frame or the hourly time frame. You're like, oh, I've got a moving average crossover. It looks perfect. I'm going to buy this. I'm not saying you can't buy it. You can. But you have to have in your mind, like, okay, I'm going to buy this, but I've got to keep in mind the smart money, the big money is probably going to come in eventually and push this market lower. Let me be really savvy with my entries. Let me be really savvy with my targets. Let's not try and get a target that's unrealistic. But you see, if you didn't do the other analysis, you won't have that mindset. So you'll just take it blindly. And then when suddenly it goes the other way, you're like, oh, what happened? Oh, the broker's done me in, or the markets are manipulated. And you'll rationalize why that's happened. Does that make sense?
It does. And I think you've unpacked a lot in a short space of time. So whilst you sip your coffee, if anybody's got any questions on that, let us know, because obviously we want to make sure that this is hitting the target, and we're not just having Andy speak or talk at you, that it's actually landing. So if you've got any questions around that, guys, just let us know. I mean, was there anything else that you were going to say on that as well, or because there was quite a few things within that itself?
Yeah, I think not enough time. Most, having done coaching for quite a long time now, most of the time, what I find is that there's not enough time spent on that aspect from most retail traders. They don't spend the time to figure out the picture. It's almost like too quick. Let me just throw in some indicators. Where are the moving averages? Where is this? And you just chuck it all on there, and you've made a whole load of noise on your chart. And then you're looking at it, and then now you're like, your focus is in the right place. You're like looking at, oh, it's near the 50 moving average. It's near this. It's near that. But you've now not got the picture. Like you should try and figure out in really simple terms the picture before any indicators go on. And once you've done that, you now understand the picture, so you can put in indicators onto your chart. But that's kind of now from the place of, you understand what's going on here. You understand where the pivot points are. I think that's a good word. Like, where are the pivot points in the market? Where is this market finding its upper boundary, its lower boundary, and its middle ground? And where are we relative to all of that? And once you've got that, now you can get to work. You can get your tools out. Like, it's like diagnosing the patient, right? A doctor doesn't just start getting tools out of their drawer and starts drilling them and, whatever they do. Like, they are diagnosing them, right? What's this? They check this, they check that. And then they're like, okay, it looks like he has this. Right, now this is what we need. And it's kind of a bit like that. Just not a life or death situation. That's the only difference. I don't know what doctor drills people, but I just maybe a dentist. Yeah.
No, it's a good analogy, mate. It's a good analogy, and I think what we've said, or what we've been speaking about, and what you've said is hit the mark, because no questions have come in, mate. So unless there's anything else you want to talk about with regards to that, we can jump into some FX news of the week.
Yes, absolutely. Let me bring in my Forex Factory. I'll just do a share. Stick this over there. I'll bring this over here. Yeah, we'll just do a screen share and share screen. So I've actually got last week's calendar up because I think it's important that we speak about Friday because that's something that I've been talking about for a little while. And on Friday, we had non-farm payrolls, as you can see, and we also had the average hourly earnings. So for those that had positions, I kind of gave you some warnings to make sure that you were aware of where your positions were and to kind of act accordingly. Because this creates a lot of volatility, and on this occasion, as I've been saying, it kind of took a higher value than other events in the past, because we've been in a period of low interest rates. The Fed tapering, basically trying to boost the economy, but it's kind of getting to that point where that's going to potentially shift. And what we were saying, and what we have been saying for the last couple of weeks, is the employment numbers could be the trigger, the signal that's going to allow the Fed, to announce a reduction in tapering, and which basically means they're going to stop buying so many assets to boost the economy, and eventually start to hike interest rates, which basically what that does is it allows people to switch from risky assets into less risky assets like bonds. And so that could have had an effect on various assets. And so, it was an important number. Now, just kind of looking at what happened here, you can see that we had a previous number of 366,000 new jobs created, and we had a forecast of 490,000 new jobs. So it was forecast to be 490,000, but the number actually was 194,000 new jobs created instead. So as you can see there, that's regarded as a failure. So it's in red. Okay, why? Because it's essentially less than this forecast. So the forecast is essentially what is priced into the charts. So that's so even if, for example, if the forecast was say 2 million and the number came out at 600,000, you know, the 2 million would have been priced in. That's what people expect. So the number actually came in lower than expected. So even though the employment did go up compared to the previous, the increase was lower than the previous, but there was still an increase. This was regarded as something negative. So that would be bearish, okay, for the dollar. So with that, with all things being equal, you might have seen a small decline in the dollar. But then we have the average hourly earnings. Now, this one was expected to be 0.4, which is basically 0.4%, the same as the previous. So an increase in the hourly earnings by 0.4%. But actually, the hourly earnings increased by 0.6%. So even though there was less people getting new jobs than expected, the people that were getting new jobs are basically getting paid more money. So in essence, this is bearish, this is bullish. So on the whole, the market basically didn't overreact. It basically stayed steady because we have one good piece of news and one bad piece of news, and it probably doesn't change anything. And so it might be a case that next month's non-farm payrolls will now become significant for those assets like gold, like Bitcoin, and that's going to potentially have an impact. So if you saw the markets, I mean, Bitcoin did fall, the euro dollar went up a little bit, so the dollar weakened a little bit, but really there wasn't a huge impact. So I wanted to just mention that because I think it's important that we keep an eye on that, and we can definitely watch out for next month's numbers. So you should have a much better appreciation for next month now. Let me just see what else we have. So let me go back over here. Why is it coming up? So we'll put the 11th till the 18th. Oh, so 11th to the 18th. Okay. So yeah, if anybody has any questions, let me know. So let's talk about today and the rest of the week. So today we have a couple of bank holidays. Mondays are genuinely quiet anyway. It's a good time to do your weekly preparation. So it could be even quieter because of the these bank holidays today. So we might have a very quiet afternoon as at the end of the London session, there's not going to be any new traders coming into the market. So normally, when London's finishing, you've still got these markets, traders trading. So, and then tomorrow there's nothing of high impact. So it's going to probably be a quiet start to the week, unless something unexpected happens. And we have CPI coming out on Wednesday. So that's the inflation figure. This is going to be an important one, month on month. So we have an expected 0.3%, forecast to be 0.3%. Because inflation basically does give us, again, another insight into how the economy is doing, right? So if prices are going up, it means there's demand for goods. And if there's demand for goods, that's, again, another signal that could lead to, a reduction in tapering and a potential hike in interest rates, which basically is positive for the dollar. So again, if look out for this, we might have an above average reaction if the forecast is beaten. So if we get a month on month that's greater than 0.3%, because that, again, really kind of puts the pressure on the Fed on the next meeting to start looking at doing that and slowing down the boost to the economy. And on Thursday, so we also have the minutes coming out on Wednesday. Could be interesting, following last week's meeting. Employment numbers from Australia on Thursday, and then we have retail sales from the US on Friday. So a lot going on, from Wednesday onwards. It's going to be interesting. And apparently early hours we have on Sunday, we have quarterly CPI. So I would advise against holding something over the weekend in the Kiwi unless you have very, very big stops, because a quarterly event can have a big impact. So because they, every quarter means that they can get the forecast quite wrong. So that's literally just after market open. So 45 minutes after market open. Okay, guys, let's see if anyone's got any questions, and then I'll bring in the charts and have a look to see what's available and what's around, and we'll come up with
based on all of this news that you've just analyzed, what in your experience, what would you be looking at now as a professional trader? What kind of ideas for currency pairs would be jumping out to you now based off the information that you've just broken down for everyone?
I'd probably like to look at the euro dollar or cable. I genuinely don't like to have two economic events matched up. So ideally, I wouldn't want to use something like the Aussie dollar, because, you could be correct. You could catch a great position on Wednesday looking to run it, and then all of a sudden you have another unknown on Thursday that could literally just completely reverse your position. There are ways around that. You can manage your trade in a certain way. But yeah, I wouldn't say I wouldn't trade the Aussie dollar, for example. I'd still look, but my first thought would probably be, let's go and have a look at something like the euro dollar and cable, and see if there's any setups there, and then we can and then I'd kind of look at a few other pairs after that. But we can.
We have had a request on the comments for the video that I posted earlier, just to let people know that the show was going ahead today. We have had a request for Euro CAD, so I don't know if that would be anything of interest to you. I know you mentioned the euro as well. So yeah, let's dive into all those that you mentioned, and that will be this week's professional trade setup of the week.
Yep, I'm happy to look at EuroCAD. I mean, today's a bank holiday. I know the EuroCAD has been dipping quite a lot for several weeks now. So we could definitely have a look at it and see if we can pick a turning point for it.
So this is the part of the show that we start the clock. We've got 15 minutes to find a high probability, low risk FX trade. So the clock has now started, Mr. Demi. Your weekly challenge shall begin.
Okay, so let's bring in EuroCAD, guys. So that's the one that's been requested, and we can break this down. We'll start with our weekly time frame and figure out where there might be a turning point. So as we've been saying, EuroCAD has been dropping quite a bit for a few weeks. But actually, if you look at the big picture, as I was saying earlier in the show, you could probably see that we're kind of just ranging. So we'll see if we can just play around with this a little bit and figure out a plan. So let's see if there's any obvious places we can find some dynamic resistance. So I'm just going to have a little look here. We don't really want to be going through the bodies, only spikes. So that looks okay. Nice 1, 2, 3 touch, and even a 4th touch there. So that's pretty decent. So we can play around with this line and see if it will also align with other parts of the chart. So here's a nice 1, 2 touch, and then we'll put this up here as well. Okay, and okay. And by the way, it doesn't need to be perfect because this is a weekly time frame. This is just to give us something to kind of look at. So I like this low point. It touches this low point as well. So we're kind of getting to a potential turning point. But you know, you've got this kind of section here. If we go through, it could be lower as well. And this is where we want to build confluence up. Okay, so let's plug in some fibs here as well and see where the fibs come in, and we'll let's do this one. Okay, so we got quite interesting. We've got a much lower. This is the 200, which is possible because it could be an overextension. So we could be heading as low as this. Let me just explore that 136.65 because the market has been there before. So if this is like an overextension and it goes down here, it would be absolutely fine. You know, if this, I mean, put it this way, if this market went down here, it wouldn't be like, you know, completely unusual, right? You can see the market has been down there before and it would still potentially stay in this range and head back up. So certainly that could happen. Right now we've got a little bit of support, so we can also plug in where our support levels are, our current support levels are coming in. So I don't want to use the indicator just yet. I'm just going to look at current price action myself. So you can see that the market has recently acted as support here, and a bit of support there. And we're just kind of in that space right now. Now, here's the thing, the picture that I see. So I think short term we get a bounce, but I'm very open to the idea that we could potentially do that. Okay, because I think once we clear these levels, then we'd. Sorry, Gavin, were you saying something?
No, mate.
Oh, sorry. Yeah, so once we've cleared these kind of levels here, then potentially there is nothing really holding this up to it going down here. But because there is support here, I would definitely start to consider anywhere from where we are to a little bit lower as a potential short-term opportunity to buy. Okay, so that's what we can look for short-term. But I would definitely be very, very wary of the market potentially going down here once we clear these levels. Okay, so let's go and have a little look and see if there's anything that will give us a potential buy signal. So we'll go into the lower time frame. I'm just going to bring in EuroCAD daily and we'll have a look and see what it looks like from a daily point of view. Okay. Right, let's have a look here. Okay. So sometimes it's just a little bit clearer. So that looks even better on this time frame. So if I just extend this out, where does that take us? Right where we are now. So this is an interesting one. Have we gone through it? Let's have a look. Have we closed below that? It looks like we have. It looks like we have. So that was a good support area. And I'm just going to plug in my down fibs right here. Yeah, that's interesting. That's pretty bearish, guys, because right here was a real perfect buy zone. But as you saw, you may have seen in the news that I brought up, the CAD employment numbers were strong and it strengthened basically the CAD, and it's now gone through this. And normally if the market doesn't pull back into our minimum expected fib retracement, which is right here, we would expect this market to overextend and to head potentially down to the 200. Having looked at all of this, I've got to say I'm not seeing the high probability bounce right now. We could get it short term, even here. I think you could take a very short term trade, and we'll go and see and explore that. But I would be looking at this as a day trade because we've got a little bit of support. You can see that I've just drawn in nice support, a bit like a channel support. But for me to kind of turn a bit more bullish on this, what I would probably want to see is, so let's say we find a short-term trade here somewhere and we buy it. I'd be looking to take a profit like on the day. For me to turn bullish, I would want to see a close back above here and then a bounce here. And then we might be talking about something like that. Okay, that would be a possibility. But right now, I would be very cautious as to taking a longer term position in EuroCAD long. I think there's a lot of bearish signals, but it has had a deep drop and it is at a support point. So we might be able to find a trade that we can take today. Let's go down to the lower time frame. So we'll go to the 4-hour time frame right now. And you can kind of see, like, even the way it's been dropping, it's very, very parabolic. It's almost like it's like the play would be almost like a mean reversion play. It's like, that is not sustainable the way it's dropping. It's just gets squeezing. Look at that price there. It's just squeezing. It's like it can't carry on doing that. So we'll have a little look at the 4-hour time frame Fibonacci as well and see if we're kind of coming into a turning point anywhere soon. Let's have a little look here at what's happened. So the market has, what's it done? It has done a shallow pullback, didn't quite reach the 38, but it has gone beyond this target, which is a good sign. And it's created a D point. I like that it's actually very close to this overextension here. The other thing you've got to remember, it's a bank holiday today, so I don't think you're going to get, you may just get the bounce just because of that. So it's like there's not going to be too much breakouts, and it's a Monday as well. Mondays don't tend to be breakout days, so it could definitely attract a bounce somewhere here. If we want to kind of see if we can, that's very close to hitting that. I love this area here, the 200. and it's very, very close to it. So it might be worth considering that as a bounce zone. Let's see what else we got here, guys. We're going to add in the daily trading range as well, just to see where so I'm going to try something here. So we have that as a possible dynamic support here. And then we have that. So you can see the market is reacting quite nicely onto these lines here. So yeah, it's got a little bit of work to get back through these levels here. So again, this could be a place where the market holds and maybe makes an attempt to go lower. I think the play that we could play could be something to do with the daily trading range. Let's kind of have a look to see how well the daily trading range has been holding. So especially more recently. So what you want to see here on the green bar is it holding or is it going through it on the whole? So here's a little example where it went through it. Most of the time it's holding. That takes you down to there. Okay. So that is 145.52. If you wanted to play a very conservative buy, you would adjust the multiple a little bit here. So we'll make this like 1.2. And you could put a buy order somewhere here. You could even adjust it even a little bit more, but I think that's okay. So if you want to be conservative, you may want to put a buy order somewhere around here, 143.36, and literally that should be a day trade, in my opinion. Or at least, if you're not going to make it a day trade, you should take partial profit, in my opinion, because the long term isn't clear. It looks bearish at the moment, that we could be heading to sort of that 136 zone, but I don't think it's going to do it in a straight line. I think you could get a bounce. So I'm going to do one more thing here, okay, and then we'll finalize this. The last thing I'm going to do is I'm just going to bring in the hourly chart because I just want to see what the hourly chart is projecting. I mean, that really looks like such tight price action. I mean, it's just look at the like that just doesn't look sustainable. But it's, you know, jumping in front of a train. It's hold on. If you just kind of connect these points here, it's actually broken through this barrier of support, and it just this is now acting as resistance, and it's right there as resistance. You know, the conservative play would be to kind of wait for it to be over here, but so if you're quite conservative, you'd want to see maybe a break above and then look to buy it on a pullback potentially. Or we're going to try and scalp it a little bit lower. Let's do one more thing, guys. I'm just going to add in the down fibs to see if there's any projections. And again, you know, it looks like this is the projection, guys, but this is a super shallow pullback, which basically intends to push this lower towards the overextension, which comes in at 143.14. I wouldn't buy it here personally, even though I can see why it might go up. I think that the argument for is the fact that it's a bank holiday. So those traders that have been trading it may not be there, so they may not be shorting it now. But for me, it's too high risk. You're buying into resistance here. If you're going to buy this, you know, for me, it'd be looking lower. Equally, would I sell it? No, because you're running straight into support right now. So maybe short term, but it's not my style. My style is I want to understand the bigger time frame. and I want to go with the bigger time frame. Right now, you're kind of in the middle. You're at a pivot point on the weekly time frame. So I think the only place to try and look for value. So if you were going to buy, say, so here is 143.30. And then the 127 fade here is 142.96, and the hourly one is 143.10. For me, I would be looking really between there and there if you're going to take a short-term buy. Otherwise, I'd kind of wait and let the market show us a little bit more. So that would be like a short-term buy zone. Let's say this dropped here and you bought it and you got that bounce. You'd either cash it all in, or you take, say, 50% of your profits and then put in that touch stop and look to leave it just in case the market does reverse. I'd even be thinking maybe take 75% of it and then leave 25% in just in case it reverses.
Cool. So that's a really good breakdown. So just to clarify, on the demiometer of low risk, high probability, 10 being the highest probability, where would you set this trade at?
If you're buying in this zone today, and I stress today because the DTR is pointing there today. Tomorrow, I don't know where it's going to be pointing. With the backdrop that I've explained on the higher time frame, and the backdrop of the fact that we have a bank holiday, so the market's going to be a little bit less liquid, so you're more likely to get a bounce. In that zone, I'd say there's a sort of 70 to 80% chance that the market's going to bounce there and bounce higher, and you should be able to make a profit from it if you manage the trade correctly.
Awesome. Cool. Thanks for clarifying that. So that's this week's FX trade in 15 minutes, just a little bit over, but we went through all the major timeframes and gave you a really clear and thorough understanding. If you're not sure how that all works, then go through it again, guys. Go through it again. And if you are totally brand new to FX trading, or even if you've done it for a while and you're not sure how he's seeing what he's seeing, he's done it for years. He's worked in the big banks. He's worked on the trading floors of some of the biggest hedge funds. So we'll put a link in for some free training as well. It's a webinar presentation. You get a ton of value. And then if you want to further your education, the opportunity is there for you with quite a few special offers and perks. But you can, nonetheless, saying that, you can get a ton of free value just by going through the content. So I think that would help you to understand what this man has just done. Now, we've had a question come in. I think this has been covered by your breakdown, but let's just go through it again anyway. Hi, Andy. I've got a question about how, if you include any fundamental consideration when selecting the pair to trade. Do you, for example, look at the COT report at the end of the week or anything similar?
Great question. I don't look at the COT report. I do have, and there's nothing wrong with doing that. I've got traders that are friends of mine that swear by it. It kind of gives them, a focus. So if you know how to use the COT report, you can put a focus on which pairs you're going to look at. My preference, if I'm honest, I do consider what's coming out economically, like as we do there. But I tend to kind of I use my alerts to guide me more than a COT report or my fundamental view. So in general, like all of my FX pairs have been analyzed on a higher time frame. So if I analyze a weekly time frame today, from a technical point of view, it's not going to change that drastically in the next couple of weeks. So any alerts and anything that I've put will be valid. Now, is a COT report useful? It absolutely can be. I think it's about finding things that you feel you resonate with, that give you the edge, that you can consistently put the work into it, because everything that we do, right, like can help. But if you're overdoing it and you're spending so many hours overthinking it, I actually find sometimes it's counterproductive. It actually has a negative effect, because you're like, oh, there's a really great setup there, but the COT report's not agreeing with it, or this is not in agreement. So I think, personally, I do, like I said, I do have traders that I work with, that are friends of mine that do. And everyone's got, but the most important thing is, it's not whether my way is the right way or whether somebody else's is the right way. My method is consistent for me, and that's really important. So it's like, I do the things that I love and the things that I believe in and the things that I'm good at, and I do them to a very high level. And so it's like, is McDonald's business plan better than Google's or Apple's? I don't know, but they both make money. So it's about just really finding your way. So there's nothing wrong with a lot of things. What you don't want to do is the things that I said, where you're just clouding your judgment with noise. So yeah, absolutely. If you feel like you have the knowledge, or you want to acquire the knowledge, or that appeals to you, you like that side of it, the fundamental side, then it can definitely help. And it definitely helps my friend find his trade. So he just focuses on 4 or 5 pairs that meet the criteria for him, and he does it his way, and he's very successful.
Cool. Wise words there, Mr. Demi. So that concludes our FX chat for this week. We'll be back same time, same place next Monday. Tomorrow, we're also going to be back live here on Facebook and on YouTube, talking all things cryptos. And as usual, the circus is getting entertaining. It pretty much is every day, let alone every week, which we do this show and we have a chat around it. So I'm excited to talk to you tomorrow about cryptos. Is there anything you want to say? One last thing you want to say about FX before we leave for today?
No, I can't think of anything in particular. Hopefully I've answered that question. It was a great question. Just kind of re-emphasizing what I said, just like you have to find your own way, utilize what we've taught you. But also, if you want to use other tools, it's absolutely fine. Just don't keep chasing the dream. Like, there's no dream system. There's no dream. It's just have a process, have an edge, enjoy the process, put your risk on, take your trades, and just treat it like, a hobby and a business at the same time, something you just you keep developing and learning, and don't try and master everything in one go. I don't think there's any perfect formula. It doesn't exist. It's just it's just a combination of things that resonate with you, and doing them consistently is the most important thing. Better to do something consistent and rather than something that you're inconsistent with, even if you think it's a better system. I think that's really important, and then you'll start to get some consistent results. So that's it, really.
Awesome. Cool. Well, that concludes today's FX Pips Like a Pro show. We'll be back tomorrow with the cryptos. For then, have a great day wherever you are around the world, or have a great evening if you're over this side of the world. And Mr. Demi, what are you up to for the rest of the day, just quickly?
Probably just a gym session and then picking up kids. I think that's about it, really, today. I might do a bit of portfolio allocation as well at some point this evening. But yeah, nothing too exciting. Listening to crying babies and demanding children.
Mate, sounds exciting. Keep living the dream. Guys, we'll be back tomorrow with cryptos. Have a great day. And Mr. Demi, we will see you tomorrow, my friend.
Take care, guys.